Happy Wednesday, everybody. Ryan here with the Ryan Grubbs team here at Mid-America Mortgage, here today with our midweek market update report. So I hope everybody had a great New Year's. We've got some good information coming out right now. So we got mortgage application numbers coming out this week, showing up 23.5% last week, which is a huge jump, showing everybody's back in shopping for real estate right now. So that's a good news for our real estate market. Also, we got job opening numbers coming out again. Now this is 6-7 months in a row. We're showing that there's more job openings currently in the market than there are actually people out there looking for jobs. So again, a great sign right there for our economy moving forward. Also, coming out is talking about, again, the government shutdown. So we were hoping to get a little bit of news last night from the president's speech there in the Oval Office. Nothing new really coming out of that. So the government shutdown still taking place. We're not seeing that having any big impact right now towards our markets. The only thought process is if this continues into the end of the month, going into February, we could see this having an impact to some of our economic news and data coming out, which again could have an impact then towards our rate markets. The other item on the board right now is our China-U.S. trade wars. Now, there's some good news coming out that negotiations went on for another day, longer than expected. They're anticipating some news coming out tomorrow, which is Thursday, in regards to some possible deals or negotiations in regards to what's taking place between the U.S. and China. Again, those are the two biggest economies in the world right there taking place. So again, there's going to be some positive news coming out potentially between the trade negotiations. Other than that, we got some news coming out also today in regards to the December meeting between the Fed. Basically, the Fed came out and said we're anticipating potentially 2 to 3 rate hikes in 2019. Majority of the market dismissed that news, thinking that possibly there are going to be no rate hikes and even potentially a rate decrease. Well, a rate decrease is not going to take place unless we see a negative GDP in 2019, which is not going to happen. So a lot of stuff that's been going on right now with our current market, where we've been seeing some of these lower level rates that we've all of a sudden gone into over the past 30 days. I think that this is going to kind of start moving back upward because of the fact that I think a lot of the market's going to start dismissing this news, along with some of the positive news that we're getting in regards to the trade wars, job openings, all this. This is all positive news, and as we've talked about, positive news is going to have an impact and cause our rates to move up. So here's a quick snapshot of the past 30 days of where we are at right now in regards to our mortgage-backed securities that impact our rates. As you can see, back beginning mid-December, we had some technical support there. We've moved beyond that. We've hit an upper line resistance now over the past 10 days. Rates have now bounced off that, and we've been losing a little bit here in our mortgage-backed securities. And here I've circled the past couple days now where we've started to move back below some of those resistance lines, again, which now loses that support that we've had at some of these higher priced levels, causing mortgage rates now to want to move back up. So something to kind of keep an eye on moving forward here over the next week or two. But that's all we've got for this week with our midweek market update report. This is Ryan with the Ryan Grubbs team here at Mid-America Mortgage in Flower Mound. Make sure to go on like our Facebook and YouTube channels, and we'll see you back here next week.